What's up, everyone? It's Caddy with Money Vesting. Welcome on board for another market open live stream. If you guys can hear me and see me, just give me a thumbs up. Just want to make sure the audio and the video is working well. We are ready. We've got 20 minutes, a little less than 20 minutes now for the inflation numbers for January 2023 coming out. So very, very important CPI numbers are going to be scheduled to be released in under 20 minutes here. The markets are very, very flat. QQQs are slightly up over 29 basis points. We've got the SPY also pushing up over 26 basis points. We're seeing a little bit of a minor gap up here prior to the numbers coming out. And I'm super excited. Hope y'all are too. I'm going to break down a lot of interesting data, such as some of the analysis, estimations, predictions. We'll talk a little bit about the new way the CPI is going to be calculated, some of the changes that are being made for CPI and the weightings starting 2023. And then we've also got a poll going on right now for inflation, so make sure that you do vote. Right now, we already are up to 100 votes, and majority of people still expecting that CPI is going to come in below 6.2%. 6.2% is indeed the consensus right now. So perfect. Audio, video working well. I'll do an audio check at around 8:25 a.m. Eastern, 5 minutes before the CPI numbers come out. We're going to listen in on CNBC, so we'll kind of listen in. And then, of course, I'll take a look at the live report on BLS.gov. So that's going to be BLS.gov. That's the official website on Consumer Price Index. And again, that comes out today. By the way, happy Valentine's Day, everybody. Completely forgot about that. So happy Valentine's Day. Hope you all have a great day today. And again, today, 8:30 a.m. Eastern, we'll find out if the market is generous with us or not. So going over to some expectations, this is already something that we talked about. This is the consensus right now, 0.5% month over month, with 6.2% on a year-over-year basis. Ex-food and energy month over month at 0.3%, and ex-food and energy year-over-year sitting at 5.5%. That's going to be the consensus for CPI today. Now, going over to inflation fixings. But by the way, first thing I want to mention is that there's been a lot, and when I say a lot, there's been a lot of predictions from a lot of different sources. We're going to go over inflation fixings. We're going to go over Trueflation. We're going to go over a lot of different banks. We're going to go over JP Morgan. We're going to go over Kansas City Fed, which is also surprisingly expecting a much higher read than where the consensus is. So there's going to be a lot of wide range of expectations from CPI in this upcoming print. So it's going to be all over the place. So just bear with me. We're going to break them down one by one. So going back over to inflation fixings, they're expecting 6.2% on a year-over-year basis for this CPI for the month of January. This is JP Morgan's game plan. I'm not going to go over that again. I've already broke that down yesterday, but bottom line is they're expecting the markets to be up or down, plus minus 2.5% to 3%, and that's going to be based off of whether CPI comes in above 6.5% or below 6%. So that's pretty much the range, and the highest probability they're kind of pegging on to 6 to 6.3% year over year, and that means the market they're expecting can be higher, 1.5% to 2% on the day based on the highest probable outcome. This is Trueflation, which has actually been quite accurate when you compare that to the last 3 years worth of inflation data. So October 2022, they expected 7.7%. The actual number came in dead point at 7.7%. November, they had a little bit of a downside surprise, so they did overhit on 7.4%. Inflation came in at 7.1%. And December, 6.5% versus 6.5%. And they're actually estimating 5.8%. For January of 2023. So again, we'll find out in less than 15 minutes whether that is going to be the case or not. Now this right here are the changes. So Bureau changed its methodology from using consumption data during the 2-year period to now only using the 1 year to weight the CPI components. And there are going to be some examples. So for example, housing has gone up by a few percentage points. It's going to have a little bit of a higher impact on inflation moving forward. These are, by the way, the changes in CPI's relative importance. And for example, housing literally just went from 32.9% to 34.4%. So housing is going to be slightly more impactful for inflation moving forward, whereas food did drop from 13.9 to 13.5%. So you can see the changes over here. So food and beverages kind of combined, slightly higher. Housing was much higher. Apparel, no change. Transportation, huge decline. Medical care decline. Recreation was slightly higher. Education and communication was slightly lower, and other goods and services also lower. So those are some of the changes that they are making, which is not super great because housing and shelter prices have not really been coming down, even though the apartments listing and rents, according to the apartments listing, national median rents have been selling off. They've been coming down a fourth consecutive month. I mean, they were down in January, they were down in December, they were down in November and October and September. I think it's 5 consecutive months, but it's not really being shown in the actual inflation report just yet. Now, there is another capital management another Kramer from Mod Capital Management, who is expecting that the equity markets will take a turn after the CPI numbers come out. And he pretty much thinks the equity markets have been, quote, in a fantasy land, and that investors don't appear to be greatly concerned about the coming CPI report, despite the warnings from various parts of the market. It seems that despite the expected increase in inflation from analysts and the warnings from inflation swaps, options, and the bond market about a potential trend of higher than previously expected inflation in the future, the equity markets is still oblivious, is what he's expecting. And if CPI comes in hotter than expected, the equity market may find itself on the wrong side of the trend once again, just like the several times over the past 12 months. Now, to some extent, there's some truth to that. The market has definitely found itself on the wrong side of the trend majority of the time, especially in 2022, kind of anticipating those pivots. The pivots never came, and the market's really sold off, continuing on that downtrend. And this right here is going to be from the Kansas City Fed, which you can also go over to the website if you want. You can literally just go over to the inflation nowcasting, Federal Reserve Bank of Cleveland, and you'll notice that this right here is month over month. And surprisingly so, this is as of Monday. This is as of yesterday. I believe this is the most up-to-date numbers. And month over month, they're expecting 0.65% for CPI for January of 2023, which is much higher than what the analysts are expecting. And year over year, they're expecting CPI to be just at 6.5%. So literally no change. This is, again, from the Federal Reserve Bank of Cleveland, 6.5%. And that's going to be pretty substantial. And core CPI, they're expecting to be at over 5.6%. Expectations are 5.5, and they're expecting that core CPI jumped 0.46 or almost 0.5% on a year-over-year basis. So again, like I said, there's a wide range of expectations. There's this all over the place, right? From 5.8% to 6.5%. That's like a 80 basis points variance between the low and the high end estimates. And of course, all the banks are kind of like sitting right in the middle at 6.2%, 6.3%. So should be interesting very much, what ends up happening. The Fed funds futures are still pricing in for another 50 basis points hike in the next couple meetings. Now we're once again pricing in for a cut. This is changing every single day. As soon as the data is coming out, this thing is changing literally by the minute. And in my yesterday's video, I talked about how this was priced in very much in line with what the Federal Reserve has told us, and the market's not pricing in any cuts. And this morning, once again, the cards have turned, the tables have turned once again, and we're now pricing in a cut by December of 2023, a 25 basis point cut. That's what the market's pricing in terms of the federal funds futures. So welcome on board. Thank you so much for joining. I really appreciate it. Make sure that you drop a like, and don't forget to vote. We're at 207 votes. I want more and more people to participate. We've got 350 people watching, so I'm sure we can get a lot of more people participating in the polls, and let us know what your expectations are, above or below 6.2% or at 6.2% with the consensus there. And of course, this right here is going to be that table at 0.5%. We're going to be sitting a little bit under 6.3, 0.4%, 6.16. Now, this is not adjusted for the new weights, so there might be small minor discrepancies considering what that month over month number looks like. But I will update that table as soon as I have my hands on the new report from the Bureau of Labor Statistics. So we're going to be ready. There's about 10 minutes left, and the clock is running, and just want to make sure that we are on track here. So yeah, it's right now. Yep, so I need to kind of fast forward that clock a little bit. There we go. There's about 10 minutes left or so. Perfect. So there's 10 minutes left now for CPI numbers to come out. We've got the SPY up 24 basis points. QQQ is up 31 basis points. In about 5 minutes, I'll do an audio check just to make sure that everything is working well. And should be exciting. What are you guys thinking here? what is going to be that number? Any plans for TQQQ or SQQQ scalp today? So Wesley, there will be, depending on the volatility here. QQQ is already up 33 basis points, as I mentioned earlier. So we have seen a pretty substantial run up yesterday. So if you do come down to kind of fill that gap a little bit, depending on what those inflation numbers look like and how the market sentiment is, there certainly will be opportunities because there will be a lot of volatility on the day today. VIX is flat, up to 20.51. Oil prices are once again kind of hovering around $78, $79 per barrel. We've struggled at $80, $81 here quite a few times. Bitcoin consolidating sideways, and then Ethereum also trading a little bit over 1,500, kind of getting that validation at that support right now. So it's going to be interesting here. Google is up about 8 basis points, so nothing really. Tesla's up about 1%. Microsoft is up 29 basis points. Apple is also very, very flat. Yesterday was a very low volume day, so there wasn't a lot of volume for a lot of stocks, to be honest. Only 50 to 60% shares are traded on an average 10-day basis. That's actually really, really low. So I'm assuming there was a lot of non-participation from institutionals, some of the big money, sort of the whales, not really trading all that much, kind of in that anticipation of what those numbers are going to look like today in about 6 or 7 minutes here. So, Shashank, do you think the market will wait for PPI? No, I think the CPI report is strong enough to move the markets quite a bit. I think PPI numbers on Thursday are also going to be important, but the market really mostly just cares about the CPI. And then PPI, we do move, but not as much as the consumer price index. So today's report is far more important, in my opinion, than PPI here. How many people actually believe that we're gonna see red on Valentine's Day versus how many people see that this is gonna be a huge rally on the day today? Let me just see. Like, what are you expecting? Like, I'm not doing a green versus red poll because we've got an inflation poll going on. But let me know what you're expecting from the markets today in the next 4 to 5 minutes, whether that's going to be a huge red or a green candlestick coming in based on those inflation numbers. So we got 8 minutes left. Super exciting. CPI and Jerome Powell's speech, like FOMC days, CPI days, are kind of like one of those few of those days that are like super exciting for the markets. It's interesting, you know, there's a lot of volatility, a lot of tradable opportunities. And it's mostly data driven, right? It's all macroeconomic driven. Green, Chris says some red for sure, but it might not last. Yeah, the sentiment's been very strong, right? The sentiment has been really, really positive overall. I mean, even though we've seen some pullbacks, I mean, indexes and individual stocks have pulled back, say 2, 3, 4%. But those have not lasted for super long. As soon as we come down to certain levels, I mean, the buyers have just stepped in like crazy, and we've just gotten bought up so much that they have really pushed markets back higher. So we have seen some pullbacks, but not to the extent of, 7 to 8% or like a reasonable drop here, but something that's very, very small, minor, in the tune of 2 to 3%. So the sentiments on the upside been very, very strong. Satish says, huge rally over yesterday's, huge green to fade red, some big red then green. So again, a little bit of, remember ChatGPT predicts a market crash tomorrow. So Troy, I did look at that on Twitter. You're right. I did kind of check that out. Somebody posted like a couple of screenshots of them asking when the next stock market crash is going to be, and ChatGPT said February 15th. Now, I don't know if that's actually, correct or if that's a fake screenshot, because I tried myself. I asked the same exact question to ChatGPT and I was getting the same responses that, it's a AI model, it's a trained model, it's not here to predict the stock market, and plus it doesn't even know past 2020 a certain date. It doesn't have the most current information. So I don't know if that was indeed correct or if that was actually fake. So, because I tried it myself, I asked the same exact question, didn't give me a date. I even specifically asked, give me a date for when the stock market will crash next. No answer, right? No specific answer. So I don't know. It kind of looked a little fake to me. So I'm not gonna lie. Chris also saying ChatGPT predicted crash on February 15th. Yep. So I don't know. I don't know if that was accurate. Anyway, so we're gonna do a quick test of our audio here. So I'm gonna play this. So let me know if you guys can hear this. Just give me a thumbs up and we should be all set here.
Certainly faster than what we've seen in the on-road market.
All right, a third trend, thus, volumes are still 25% below the last peak in 2013, partly due to supply chain problems, which could mean the peak might last another year. Her biggest concern, guys, tensions with China, by far our #1 ag export country, and South America is standing by to fill the gap. Back to you.
Jane, is there real demand for an electric tractor? Is that something farmers want, or is it something that they'll take if it's subsidized?
I think you got it there in the second. I mean, they're interested in it. They want to know what the range is, how much it saves them money in the long term. You don't want to spend big up top for something that you're not going to get the money back on. They're more interested, Frank.
All right, perfect. So that's good. Somebody mentioned that it was very loud, so I did reduce the volume a little bit. So Jeffrey, I did. So hopefully it is much better now. And yeah, we're ready, folks. We're ready. Less than 4 minutes. CPI numbers coming out bright and early, and I'm gonna be breaking them down in this right here. That's gonna be the live report. We're gonna reload this page, and the first thing we're gonna focus on is CPI for all items. And again, what that number looks like, rises or falls by that percentage in January. And whatever the catalyst was, then we're going to break down the PDF for the month of January. So super exciting stuff. We are ready to go here in about 3 minutes. Let's go. Let's see this. So 342 votes. Vote while you can. 2 to 3 minutes left. So if you want to vote, we still have the majority now above 6.2%. So that's shifted fairly quickly, because earlier the majority of people were expecting below 6.2%. So maybe something has happened. I've kind of gone over some of the things here. So definitely a little bit of a shift in the overall polls here. And now 40% of you expecting CPI is going to be above 6.2% at the moment. So all right, so we're going to end the poll there, and we are ready. We're good to go. QQQs going into this print are up 36 basis points. We got the SPY up 30. So we're going to keep the SPY over here, QQQs over here, and then we're going to keep a close eye on the dollar index. Actually, the bond yields are going to be over here, the dollar index over here. They're going to be hidden by the CNBC screen, so we might not be able to see it right away, but eventually we will take a look at how the dollar's reacting, how the 10-year yields are reacting, and of course the SPY and the QQQs as well. That's going to be live on screen. All right, so I'm going to stop talking now. I'm going to just switch that over.
Green light.
Welcome back to Squawk Box right here on CNBC. We're just a few seconds away from that January CPI inflation number. You're looking right now at the futures, and ahead of this, you're seeing a little bit of optimism. Yesterday was a very strong day for the markets, and we're carrying through with the futures this morning. Dow right now up by about 97 points. S&P futures up by 13, the NASDAQ up by close to 50. The 10-year yield has been picking up over the last couple of weeks. If you check things out right now, especially over the last week or so, you'll see that the 10-year is yielding 3.679%, so getting back towards 3.7. Let's get it over to Rick Santelli. Rick.
Yes, the January read on the Consumer Price Index headline number expected to be up 0.5% delivers exactly that, up 0.5%. And we know that minus 0.1 originally released for December was modified a week ago with benchmark revisions up 0.2 up 0.1%. So this was as expected. Now we strip out the all-important food and energy, also up exactly the expected amount of up 0.4. Now, the big numbers. CPI year over year, and this number has been going down. It is 6.4%, 6.4%. This follows 5.7, and it is the fourth number in a row in this series to move lower. And if we look at the year over year core, we're expecting 5.5. It is higher at 5.6. But is sequentially lower than the 5.7 in the rearview mirror, extending the run of seven from the, excuse me, on the core, this is 4 in a row at 5.6. 6.4 headline is 7 in a row, down from 9.1%. That was in June, and that was the 4-decade high. Now, here's the fly in the ointment why rates are going up. Even though the year-over-year numbers are each 1/10 lower than the rearview mirror, they are both a little higher than expectations. 6.4 was expected to be 6.2, 5.6 was expected to be 5.5. And here's the rub, okay? If you take X food and energy and then X shelter, that's now known as the super core. Now, I can't dig down into the data that deep, but many are doing that as we speak, because shelter last look in December, when we were up year over year 5.7%, was over 50% of that number. So super core is important because all of a sudden the Federal Reserve is very concerned about what's going on only with the core service sector. And that's what's left in the super core when you take out food, energy, and shelter. So rates have moved up, but not that much. We're at 370. We were right at 366, 367 pre-number. The pre-Dow futures are hovering just about at the same spot. And remember, if they go much over 34,407 and they're close, that would be the highest number going all the way back to January 17th on an intraday basis. So this number might be higher than expectations on year over year, but it's behaved on actual numbers, and the markets seem to be taking it in stride. Now, back to the panel.
All right, Rick, thank you. And stay with us. We want to bring in a few more voices on this, too. Our senior economics reporter, Steve Leisman. Netta Issa, who is former Deputy Assistant Treasury Secretary under George W. Bush and Associate Professor at Georgetown, and Jason Furman, who is a Harvard professor and former chairman of the White House Council of Economic Advisors under President Obama. Steve, we will go to you first to kind of dig this through. Rick's right. The market swooned on this because this is a very important number, kind of took a look at it and came back to where we started almost with the futures. Oh, up by
not
218
necessarily.
now. Yeah, I was looking at 31.
Not necessarily, Becky, though, now we've got to move the other way. Yeah, you get this bounce around. I'm going to say Rick is right on that. There was a moment there where they tightened up a bit on the Fed funds futures, but now they've loosened up. I'll come back to that in a second. I think the story here is energy giveth and energy taketh away. We were up again 2% on energy. So a lot of the decline in the headline that we've had has been energy related. Food once again up 0.5%. We did get some help, which was sort of unexpected, from used car prices down 1.9%. But a key here is that shelter or housing up 0.7%. We can't get a break in terms of getting what we think are some of the indicators outside of the CPI showing housing and shelter going down. It's not yet filtered into the index. When it happens, that will help. And this all sort of underscores this idea, which has been coming from the Fed, that the road to disinflation is going to be a bumpy one. And just one other thing, if I read this correctly, we did get a raise.
So, all right. So we increased month over month 0.5% for headline CPI, year over year jumping up to 6.4%. So It was slightly higher, kind of missed on consensus there. 6.2% was the consensus, so we came in at 6.4. And excluding food and energy, so core basis, it was up 0.4% month over month and coming in at 5.6%. Also missing expectations on both ends, month over month and year over year. What I was going to say is, man, this market is strong. This market, the sentiment is strong. Like on a report like today, I would have not guessed the markets would have been higher, but yet they did sell off quite a bit and then they rallied right back up. Then these two candles, pretty much the market pushing higher. SPY still up 0.52%, so 0.5% green, and the Nasdaq is up 67 basis points. There's a lot of positive sentiment out there because a report like today, now there's a couple different ways that you can look at it. You can look at it right from an absolute basis on the surface, missed expectations. The only thing, it kind of pretty much the base consensus was 0.5%, and we kind of hit 0.5% month over month for headline CPI. That was the only thing out of the four things that we met expectations for. Everything else, all three, the other ones, we missed expectations on the year-over-year headline, month-over-month core, and year-over-year core, missing expectations. So markets still pushing higher. However, I think there is that consensus that shelter prices, right? So if you take a look at shelter, it was brutally up 0.7% on a month-over-month basis. Annualized, that's way over 8%. And year over year, it is now up almost 8%. So if you take a look at shelter, it has been going nowhere but up, right? So this right here is a screenshot. Take a look at shelter here. Every single month, 0.6, 0.7, 0.7, 0.7, 0.6, 0.8, 0.7. It's not slowing down. It is just absolutely not slowing down. And what's worse is that they have increased their weighting for shelter from 32.9 to over 34%. So it's now worth even more in the overall CPI as a component. So I think the consensus is that eventually shelter prices will roll over. I mean, as you know, as you guys heard on CNBC, I mean, there's a lot of other indicators that are suggesting the shelter prices, housing prices, and just rents in general are coming down. And we even broke that down in our other video, pre-inflation video, where we talked about the national median rents on apartmentslisting.com. And they were suggesting that for 5 consecutive months, we've seen shelter prices come down, but it's just not showing up. It's literally not showing up in the CPI report, and it's still up 7.9% on a year-over-year basis. When you take a look at food, 0.5%, pushing higher. And unfortunately, gasoline was not coming up to our rescue this time. Gasoline has done really well. Energy has done really well. It has come to our rescue for a lot of time until finally stabilizing here. So if you take a look at this section over here, energy, and then of course even electricity, utility, pipe, gas service, all these things declining quite a bit, -4, -4, -2, and then -2 over here, quite a significant decline in December, -7, -7, -16, and then unfortunately rising in the month of January, 2% increase in energy commodities, 2% increase in energy overall, 2.4% increase in gasoline, and a little bit of a decline in fuel oil, which we also knew, right? So in the month of January, crude oil, WTI crude, was down in the month of January. However, we didn't quite see a significant decline in gas prices and overall energy prices, slightly up 2%. So it's just, gas has been doing, and there you go. I mean, the market's coming down. Like I said, this has been a very strong sentiment from the markets on this type of report. The markets, in my opinion at least, should not be green. I mean, there should not be like a day of like 0.5%, 1% green. Once you start to digest this report, it's a miss. It's a brutal miss on all three fronts. One of them we kind of meet expectations, but the silver lining is the shelter prices are not slowing down. If and when they slow down, then inflation can really drop like a rock. It'll literally just get into deflation territory. Because think about it, shelter makes up over 34% of CPI now. And once shelter prices start coming down, and if we can start seeing -0.2, -0.4, -0.3% here, that will be a huge, huge impact on overall inflation. So 6.4% looks like the Cleveland Fed, that's the tongue twister, Cleveland Fed was actually correct in their estimation. Not so much so that we kind of hit 0.65, but year over year, we are at 6.4. They were expecting 6.5. Inflation fixings not really coming in through this time with their prediction. Most of Wall Street analysts missed expectations, and Trueflation was off by a mile, expecting 5.8. We came in at 6.4. So it's like a 60 basis point spike in their actual inflation versus what the expectations were. The Fed funds futures, we're going to do a quick check here, see what the numbers look like, and if there's any changes in the probability for the Federal Reserve here. So 87% probability that we're going to see another 25 basis points, but going over to the probabilities over here. And so there's a change there. It's kind of looked like a pyramid now. It kind of looks like a very, very nice increase. Now the market's pricing in a little bit of a more aggressive Fed. There you go. 41% probability that by July, rates are going to be at over 5.25 to as much as 5.5%. Welcome to a potential, not an actual, but a potential stagflation environment. That's what it could look like. And that's something that we have to pay close attention to, because I mentioned in my other videos that, what if inflation comes down, and then starts going sideways, starts stagnating to the sideways, and ends up at roughly around 4 to 5%, even 6%, and stays there, right? That's a stagflation economy where inflation is not coming down. It's like really, really stubborn. And I think shelter prices will have definitely a lot to do with it. So Fed funds futures flipping over. We're now getting even more aggressive, 5.25 to 5.5% by July. And of course, then couple cuts priced in by September and December, 25 and 25. So 50 basis points cuts priced in. So, right now the market's expecting a really volatile interest rate policy here in the rest of 2023. Like another 75 basis point hikes in the next 3 meetings. And then the following meetings, just 50 basis points cuts. I doubt the Federal Reserve is going to play around that much. They're not going to raise 75 and cut 50. I think they're probably going to raise 50 and keep them there, maybe even raise 25 and keep them there. But the market's still pricing in. All right, let's see. Let's see how the markets are moving. So, okay, SPY is flat, only down about 0.12%. We did get the yields kind of dropping a little bit. They're back up to almost 3.7%. And we got the dollar index also falling, then a little bit of recovery back up. So back up to almost 103, and the NASDAQ is down 24 basis points right now. We are getting Tesla down 43. Google is down about 74. Apple is down 45, and Microsoft is about flat at the moment. So what do you guys think? What is the consensus here among all of you guys? We got almost 800 people watching. Make sure that you drop a like. I've already shared my views, but I want to hear from you. What is the consensus? I've been kind of hearing stories about rent prices not really coming down. Rents have still obviously been much higher. They're only going higher, unfortunately. So raising interest rates is raising shelter costs in the short run. Landlords charging more for rent and paying more for mortgages. Hassan, that is true. That's a very, very vicious cycle, unfortunately. And there's very limited control over what the Federal Reserve can and cannot do, right? Something that we have discussed. And the Federal Reserve, unfortunately, has been partly fighting a problem and a situation which they have little to no control over, right? Such as energy supply, shelter costs, right? Housing prices. Those are things that the Federal Reserve can affect indirectly, but it's going to take a lot of time. At this point, for shelter prices to really come down, there has to be a significant amount of supply, right? Significant amount of supply in the market. And it's just, right now, every single month, if you've seen over the last 6 months, 7 months on an annualized basis, it's still up almost 8%, which is pretty substantial if you ask me. And now it's even worth more. This new BLS changes in weights. So, Priyank says surprised by the strength of the market. I am too. I think the market's pushing higher on that inflation print was definitely quite interesting. There is definitely a lot of sentiment, and we'll see what happens intraday today. But the overall inflation numbers were kind of okay. Definitely not super great. Not bad either. We're still down year over year, so we got to give credit where credit is due. So we're still down on a year over year basis, but it's it's just because of the higher comparables, and we're kind of missing expectations there. And shelter is to blame for the most part. So Francisco, do you still stand for your window of opportunity to DCA on some stocks here? So yes, for the most part, we have been taking advantage of that. And had you been doing that, the markets have ripped through all of January and of course most of February as well. So that's obviously done really well. But I think we have to really constantly understand the changing landscape of the overall market. And if there is a stagflation type environment, we have to really, adjust to that type of trading environment, right? Investing environment. And stagflation is going to be where inflation's higher, unemployment starts to go higher, and economy really starts to contract. So I'm going to be really interested to see what Jeremy Siegel has to say about shelter prices, because he's definitely been quite vocal and quite pissed about shelter prices, and he's expecting them to be a huge lagging indicator and for them to eventually come down, but we're just not seeing that yet. In LA, I don't see any price costs going down. Food are the same or more. Gas is still high. I have some rentals and I'm also planning to raise the rents. No choice for our family, Alex says. So yeah, that's, I feel like landlords are in a very similar situation where they are raising rates. I mean, even in our Discord, we've got plenty of people that own rentals and they're also talking about raising rents. And it kind of gives you a sense of what's actually happening, right? I mean, if they're the ones raising rents, then of course shelter prices are going higher. Maybe not on an aggregate basis, but you can get a good sense of, even with the smallest data set, that overall rents are either staying the same or they're going higher. So Hassan, how does shelter cost come down without breaking the economy? Which group of landlords is going to start to decrease rents before interest rates start to go down? That's a very good point. That is definitely a very good point. And by the way, Ken Casper says 730 people watching, 88 likes. It's Valentine's Day. Come on, people, show Caddy some love. Thank you. Yes, I really, really appreciate it. If you guys would simply just like the video, I would really appreciate that very much. But no, I think you're absolutely right. And I think the reason for when the rents can potentially start to come down is if and when unemployment starts to push higher, right? Because if unemployment starts pushing higher, if people, unfortunately start losing their jobs, then they're going to either cut down on their spending or plan to relocate altogether to kind of make sure that they're not, running out of their savings, depleting their savings, or either find a job out of state, someplace where they can move to. And that way, I think there can be a little bit of a pullback on shelter prices overall, right? The demand needs to kind of pull back a little bit so that the supply can be a little bit more, and as a result, shelter prices in general start coming down. And I think the only way that happens is if unemployment starts to go up a little bit, because if unemployment's at record low levels, like we're at 50-year low unemployment, people still have the capacity to pay. Right? People still have even though the economy might be going through a slowdown, whatever is happening, if people are still employed, they still have the capacity to pay, right? They can still pay their rents. Even if it's a, let's say 5%, 6% increase in their rents per year, or 10%, they can still make their ends meet if they're employed. So I think that's the dilemma here. We're dealing with a very strong labor market, but at the same time, that's also again, that's a debate for wage inflation, right? So if wages are higher, if people are employed and they're doing really well, they can still keep paying for these higher prices. And as a result, prices just don't come down. They just never come down. So that is something, we need to kind of discuss as well from a shelter standpoint. So if you get into a stagflation, how will the market be for 2023 and especially for 2024, Alex? So very, very defensive, right? So it'll be a lot more defensive because in a stagflation type environment, economy is not really growing all that much. So you can expect a lot of the defensive names such as staples and consumer defensives and even utilities to do a lot better than something like tech or growth because, stagflation, inflation's higher, interest rate policy is probably higher, and we're seeing a little bit of a contraction in overall economy. So it's going to be a little bit of a flip that script type situation, which is, what we're dealing with right now, because year to date so far, it's only been tech and growth and speculation. Of course, those sectors have done really well on the back of short squeezes, and then a lot of really, really good inflation prints. But if we actually see a stagflation type environment, it could be a little bit of a flip in the overall script here. But markets pushing back higher. We're actually very flat. We're very, very flat. Literally, I think it's investors trying to figure out how to dissect this report and what to make of this inflation report, because we were on this very nice, consistent path lower. And now it kind of seems like we have stalled a little bit, right? So this is the number we're coming in with. So let's just zoom in. So it's still a decline, not going to lie. I mean, it's still a very good drop from back in June, right? 9.1% down to 6.4. But the real concern is the very significant decline, 7.7, 7.1, 6.5. We're seeing very nice declines, and then just only a 10 basis point decline on a year-over-year basis. Then, of course, if you take a look at shelter prices, man, look at those shelter prices. Like, what is going on? They're just like nonstop. 7.9% now, just about in 2021, 1.5 this has been one heck of a rally here for shelter. Food is now starting to slow down, which is good. Food prices are coming down. Unfortunately, energy did its part for a very long time. Now it's starting to rotate back higher. So you can see how 41% back in June, it had consistent drops. Like every single month we were coming off up until, of course, January, when it kind of went up from 7.3 to 8.7% on a year-over-year basis. So January did its part for energy did its part for a very long time until January hit, and we're now pushing higher here. Natural gas, very significant increase in January, 26.7%. Used cars did come down. Electricity was slightly lower as well, but shelter. It's shelter that's really causing the problems. And then core, 6.6% down to 5.7%, and then a little bit of a slowdown in the rate of that decrease for overall inflation. I think that's the big issue there. So Frank says, that's also a good point. That's a really good point too. But yeah, I guess that's a fair point too. But if unemployment also does rise, I mean, people definitely would want to relocate, spend a lot less. So I guess on an aggregate basis, it really depends, obviously what people end up doing. But during recessions, rents, I mean, that also depends if there's a significant drop in housing prices, right? Because housing prices have also been pretty elevated, right? So there not a lot of people will be encouraged to sell their home if prices remain pretty elevated, right? That panic sell actually comes in once housing prices start falling off quite aggressively, and there is also a lot of fear around a recession, and a lot of people start selling, and that's why they go from like homeowners to rentals. But if housing prices remain pretty elevated and strong, then in itself, I think that should not create that problem. Oleg is saying, pretty nice data if you consider last 3-day manipulative index change in shelter allocation. Even manipulation of index change does not broke another read of downtrend. Best time to buy. No, that's true. I think it all comes down to shelter, right? That's really the driving force here, both on the upside and then hopefully eventually will be on the downside as well. It's just a question of whether rents and shelter prices come down or not. And to make matters worse, I mean, they've just increased their allocation to now 34%, a little bit over 34%, as if shelter wasn't already enough of a component in CPI. And now all it's going to be like it's a game of shelter. That's it. Like every CPI report is just going to be a prediction of shelter, pretty much. Food prices are coming down, as I said, energy rotating back lower, so that's good, but Kevin says egg prices are up another 8%. Absolutely crazy. And shelter takes time. That's true. It's a lagging indicator. But there's a silver lining, and the big silver lining is that if and when this actually starts dropping, it'll be fast. It'll be fast. It'll be coming down pretty heavily. And I think we'll just get like 2 or 3 reports of shelter just declining so much that inflation overall, CPI year-over-year, comes down to like under 3%. But that's also if we actually get some deflation in shelter. All right, so let's just do a quick poll. This should be a good poll for today because we've got the inflation report and the markets are flat. So I'm actually very excited to see what that poll is going to look like today. So green, red, or flat, make sure that you do vote. And we'll see what that number looks like. Babani says Kevin never comes with anything good. What is inflation on peanut butter? Why? You're trying to buy some? I don't know. I don't know if I have the report open still. Oh, I do. I think I do. I don't know. I don't know if it's going to have it. There we go. Other fats and oils, including peanut butter, for the month was up 3.3%. You better buy it now, man, before it goes up even further. Yeah, so this is for November to December. So December to January, we got to look at. Actually, it's down 0.6%. So peanut butter was down 0.5% on a month-over-month basis. So there you go. A great deal. 0.5% discount. So yeah, the market's here, just very, very flat. We're going to open literally at 0.0% for both the SPY and the Qs. A lot of individual stocks also very flat. I mean, Tesla's just 0.0%. Google's the only one that's kind of hurting a little bit. It's got its own problems. Apple here down 0.5%. Microsoft is up. I mean, let's take a look at Meta. It is slightly higher, slightly down. And Nvidia, on the other hand, is up over 0.17%. And we got Netflix down about 0.5%. So let's just break down some earnings, shall we? Because we do also have earnings to talk about. And Coca-Cola reported. So let's just break that one down. I talked about Palantir. Palantir is higher 17% right now. Let's take a look at how this inflation report affected Palantir's gains here pre-market. So now up almost 15%, but still doing really, really good. And a video on Palantir is coming soon. They beat on expectations on EPS and revenue. So that's a very strong number coming in. But once again, getting a little bit of a rejection there at around 870. So that's a big resistance for Palantir there. Coca-Cola also beat expectations on revenue, and EPS came in line with what the expectations were. So what I'm interested in is their forecast. So let's see if they have any forecast for us. So for 2023, the company expects adjusted EPS growth of 4 to 5%, while the FactSet EPS consensus of 255 implies 2.8%. The stock has slipped 0.2% over the past 3 months. So, okay, 4 to 5% is what they're expecting. So let's just do $3 in EPS for Coca-Cola, right? $3 in EPS, and this stock is trading at 20 times. Actually, it's not going to be 3. It's probably going to be 275. 21.8, so a little bit under 22 times earnings for a company that's going to grow earnings by 4 to 5%. I'll let you be the judge of whether that is appropriate or not, if that's too expensive or too low. So Eventide says, I'm here now. What did I miss? Man, a lot of things. We went over the entire inflation report. And now we're just going over earnings. But inflation overall was kind of okay. 3 out of 4 misses, 1 in line. So nothing was a beat, unfortunately. And, towards the end, it kind of flipped, right? We had a poll, and people were expecting at over 6.2%, and we actually ended up at over 6.2%. So props to you guys, majority of you guys, for anticipating over 6.4% in inflation. 6.2%. So in mode here, they are going to be reporting. Actually, they did already. Yeah. So beat on EPS. Revenue was also a beat. So very strong numbers coming in. And let's see. Increase of 21% compared to fourth quarter 2021. 2023 non-GAAP income from operations between 236 and 238. And 23 earnings per share of 264 on revenues of $522 million. So 264 in EPS for in mode and trading at 34. Let's just do that math. 34 divided by 264, trading at under 13 times earnings. It's actually a very, very good valuation for in mode. I'm not going to lie. So yeah, I mean, 13, 12 and a half, 13 times earnings. It's not bad at all for in mode. Right now, just lots of consolidation here for the company. So did Palantir finally make a profit? We can take a look at Palantir's numbers here. Palantir's earnings, investor relations. I doubt they made a profit on a GAAP basis. That was probably a non-GAAP number that we looked at, which is probably like 4 cents per share or something. But let's see. Earnings release. We're going to come down. So yeah, this is the adjusted earnings per share, right? So as I said, adjusted earnings per share diluted, 4 cents per share. That's the number that we saw. And that's on a non-GAAP basis, right? So unfortunately, still on a GAAP adjusted basis, they had a loss from operations of negative $17.8 million. So yeah, it's just another day in Palantir's world, unfortunately. So if you come down here, yeah, so for the entire year, about $161 million in operating losses, which is actually a lot lower than same time last year when they did $411 million. Interest income, $20.3 million. So that's where all the cash is going, on interest income. So they can actually report some decent numbers here Because in my recent video, I talked about how the Palantir is sitting on over $2 billion worth of cash, and they're not really doing anything with that cash. Instead, it's just sitting on marketable securities, earning interest of $20 million. Good for them. Net loss, $371 million. And again, for the quarter, $33 million, but that's also, again, adjusted over here because it's unaudited that we're looking at right now. And for the balance sheet here, again, $2.6 billion of cash, marketable securities of $35 million. And then we've got some deferred revenue, $183 million. Goodwill is, they don't have goodwill. That's actually really good. For a company like Palantir not having goodwill, that's a step in the right direction for them. Yeah, so overall, again, it was non-GAAP. GAAP basis, if you take into account stock-based comp that they're paying, which is a non-cash expense, they can write that off, deduct that from their bottom line. Thanks, Scotty. Guys, all right, you know what? I'm going to go by Scotty now because a lot of people just call me Scotty for no reason. But apparently I've got couple names here. Yeah, that's about 1% interest. Yeah, Hassan says goodwill on the balance sheet is scammed 90% of the times. Absolutely correct. But it also depends what percentage of goodwill is accounting for the total assets, right? That's actually part of our financial health metric. So in our metrics, all the 34 metrics that we look at, under financial health, there's one specific metric that we look at, and that is goodwill as a percentage of total assets. And if it's anything over 10%, then yes, you definitely want to pay close attention to that. If it's under 10%, that's fine. It's manageable. But if companies are reporting, $5 billion of assets and, $3 billion is all of goodwill, then yeah, I mean, it's an intangible asset. Anyone can put down, goodwill there. So you got to be careful with those. Man, the markets are dead. It's like literally nothing at all. 52% expecting red. We got 33% green and 15% flat at the moment. Yeah, so Christian, thoughts on Google's stock dropped so much since our live events. We talked about this during our live stream. I remember talking about it and mentioned that, it kind of felt like Bard AI was very, very rushed, unfortunately. And, even people working at Google kind of said something very similar that, Sundar Pichai kind of rushed Bard AI's announcement. And in that tweet, somebody else mentioned that Google has not learned from Apple, where you don't need to be first, you just need to be better when you are the market leader. And I think Google being the market leader, they can take their sweet time. Like, they can actually take their time to do things right instead of just trying to beat, Microsoft in this race. Now, I get it. I mean, Microsoft is not like a small tech company that's going to have, a couple million users participate in their platform or their beta test, and Google can just ignore, because they need to be fast too. Like, in Apple's case, they've never had to deal with, a company that's obviously taking away market share in North America from Apple, so that they can do things well, they can do things right, they can take their time. But for Google, it's a time essence thing as well, because Microsoft is no small player. If they start grabbing onto these market share, they start grabbing onto these users, man, Google's going to have a tough time regaining that control and trust. So it was kind of rushed, in my opinion, but at the same time, it was... So Hassan says, yeah, everyone hates Microsoft reputably. I don't think so. I don't hate Microsoft. Why would people hate Microsoft? Microsoft is one of the best well-run companies in the world. Plus, they own so many really cool projects, right? So GitHub, Microsoft owns. LinkedIn, Microsoft owns. I mean, they've got a lot of really small projects that can really become something much bigger than where they are right now. Yeah. So, yeah, markets overall not doing super great, especially on the individual stock side, but indices are flat. If there's any companies you want me to go over, I'm happy to go over that. Coca-Cola, we just went over. Palantir, we've covered. Later today, we've got InMode, we already covered. But later today, we've got Airbnb, we got Upstart, and then we've also got NerdWallet along with Suncor. And of course, later this week, we got Shopify, Trade Desk, Roku. Lots of really interesting companies coming out. So Tesla down pre-market, what's going on there? That's a small drop, 40 basis points, pretty insignificant. That's like a split second thing for Tesla. One bid and it's going to be up 0.5%. So I wouldn't necessarily read too much into it. It's just a small drop anyway. So Zim integrated shipping was down quite a bit yesterday, right? 6% down to back under $21. Yeah, time for a pullback for sure for Tesla. Upstart, we can take a look. By the way, make sure that you do vote. 52% right now are expecting the markets to be red today. So Upstart reporting later today after the bell, negative 47 cents per share in EPS, and that's very much in line with what they've also guided for, because they've been, they've gone from profitability to now generating losses, which is quite a tragedy for Upstart, unfortunately. But $134 million is going to be that revenue. And I was looking at the options chain earlier, like I said, 9%, 10% return on collateral for the next 30 days, which is quite good. And I'm very tempted to kind of take advantage of it. But then you never know with Upstart, man. It can drop like 25% on earnings and then really start selling off. So it's like a really volatile name. So you got to really tread carefully here. Even though the delta was like really good, the probability was low. But with Upstart, the probability is never low. It can certainly drop down like 30% on earnings if, of course, the numbers are not super great. So support is going to be $12. If I do end up selling a cash good put, it's going to be around $12.50 strike. And I think the premium was about $1. It's going to bring my cost basis down under $11.50. That's about a 28% downside protection for Upstart. But of course, if it rallies, those puts are absolutely going to print right away. Let's take a look at STEM. Lots of people talking about it. So $9. The market got 1.4 billion. Unfortunately, not a lot of revenue growth here, not a lot of profitability. Every single quarter is unfortunately a loss for the business. So we're definitely gonna table it. We'll add it to stocks that we may need to analyze in the future. But for now, I think it does lack a little bit of consistency and profitability. So Puru, CPI out. Yes, CPI came out about an hour ago. We broke that down, so you can kind of go back on the video, watch that live stream, and then kind of jump over to the live stream here. But yes, we were not super great on the CPI numbers there. All right, so for earnings, I'm going to do a video on Shopify, absolutely, Twilio, DraftKings, Applied Material. Been meaning to do a video on that for so long. Datadog. So those are some of the companies. Palantir, I'll do an update on. Arista Networks, I'm also interested to kind of see where are they trading at. ANET, they're down about 82 basis points. So beat on EPS, beat on revenue. But I want to see what their guidance looks like for the future. So for 2023, doesn't look like they have any guidance here. All right, so I don't think so they did share a Q1 23 outlook, but not for the entire year. But non-GAAP EPS came in $1.41, beating by 20 cents. Revenue is up 55%, a very strong year over year, beating by $80 million to $1.28 billion. Non-GAAP gross margin 61%. Man, this is a fantastic company. This is a really, really good stock that you, in my opinion, should add it to your watch list and just wait. This is a stock when if it drops down to low 100s or even down to like the low 90s, would be a very, very interesting stock here. Just take a look at their revenue and earnings. Phenomenal. excellent growth there. So is that manipulation from Shelter, which Shelter gives us the chance to buy big, at least today? I doubt, as investors are more clever current days. So again, I mean, it's a question of whether Shelter prices eventually do drop or not, right? That's a big question. Yes, you're right. There's been a small manipulation, right? We talked about how the weightings have changed. This is the most current and up-to-date changes in how CPI will be calculated in 2023. So housing, you can see, has seen the biggest increase in its weight. Transportation's coming down. So even though used car prices, new truck prices, they were lower, they didn't have enough impact to bring inflation down, which again seems a little bit manipulative, right? Medicare, recreation, education, and communication services. Some of these things like medical care services, education, if those prices are coming down, they're not going to put as much impact on inflation anymore. If Shelter keeps rising, it's all going to be about this. So that's a little bit of a change in the weighting, but it's really a question of about housing, really. I mean, moving forward, if you expect it to come down, then absolutely, I think we're going to see a faster move down for inflation overall. But if you don't, then it's going to create that stagflation type environment, unfortunately, for the market. 190 is strong support for Tesla. So right now, we've got a support at around, I would say like 165 is a very strong support. There might even be a small support in the 175 levels. But 190, not so much. Like I don't see anything at 190 here for Tesla, but 165 is going to be a decent pullback and also a very good support for Tesla. It's going to cool us off a little bit on the RSI and the MACD there. What's my thoughts on Bros? BROs? Dutch Bros? Okay. Dutch Bros I really used to like. They were a fantastic coffee brand. I remind me, are they only in the Midwest? Because I remember going to them, Dutch Bros, in Minnesota, and probably even in Wisconsin, but I didn't find any of them in the East Coast or on the West Coast. So maybe they're probably only a Midwest brand, right? So they're based out of Oregon. Yeah. Anyway, so revenue margins are really low, unfortunately, in the coffee business. So that's one of the reasons why you're seeing, like 10% margins and kind of declining down and then generating a loss in 2021. And then quarter over quarter, again, really, really low margins. We're dealing with less than 1% profit margins for the company. So for the most part, it's just been trading sideways. And it's really been that way, like, for the most of 2021, 2022. I would say like the support, very strong support around here. Kind of dealing with some of those moving averages, but lots of consolidation there for Dutch Bros. So resistance is going to be around here at close to $43, $44. Oh, they are on the West Coast too? Okay. Really, I never found them. Mostly I thought they were in the Midwest. Oh, they're moving to the East Coast aggressively as well? Gotcha. But anyway, $43.71, $44 is going to be that resistance here. Support level 27.63. Lots of consolidation for this company right now. All right, so 15 more minutes and markets. It seems like this is like a slow and steady bleed for the Nasdaq and the SPY. QQQs are down about 0.5%. This has been really volatile though, that's for sure. Kind of rallied, over 1.7, 1.8, almost 2%, then dropped 1.6%, then rallied 1%, and then dropped 1%. It's just been all happening in the last hour for the market. Just incredible amounts of volatility here. So FOMC members, I think there's only Loretta Mester talking later this week. I don't know of any other members that are talking this week. They did speak a lot in the past couple of weeks here. But, okay, so Lori Logan is speaking. Okay, so we do have a lot of members. They weren't on the calendar this weekend. This weekend, it was pretty pretty wide open. There was a lot of white spaces. We didn't have any Fed member talking until Thursday, Loretta Messer, but it kind of seems like it filled up. So, okay, we do have Patrick Harker and John Williams also talking. So, sure, I mean, they might kind of reflect on the current inflation data. And obviously, it's going to probably move the market, depending on what they end up saying. I'm really kind of interested to see the Fed funds futures flipping out so much on this news, and now pricing in 75 basis point hike and then 50 basis point cut. That's 93% probability the Federal Reserve is absolutely going to raise rates. So, okay, now it's only pricing in a 25 basis point cut. I was trying to figure out, like, does this thing look a little different? It does, doesn't it? Yeah, it does. So now we're pricing in for a 75 basis point hike and only a 25 basis point cut from the Fed funds futures here. So 5.25 to 5.5% is going to be that terminal rate that we get up to by July, and then only one cut in September. I won't be surprised if this number also gets pushed out a little bit. So in other words, this 37% turns into 40%. This 29% turns into 39%. In other words, we kind of stay at 5.25 to 5.5% until November, and then get a cut back down in December to 5 to 5.25%. So wouldn't be surprised to see that, but I wonder the big yearly spike to the upside when report came, was it because they expected even worse CPI data? It's possible. Again, who knows? I mean, this mostly can be regarded as mostly like algorithmic trading, because if the markets are moving up 1 to 2% right in the first few seconds, there's no like manual orders being placed. There's a lot of computers that are just trading based on some algorithms or keywords or whatever they're looking for. And once people start to kind of digest our report, they find out, okay, it's not that great, it's not that celebratory, and then you have to kind of sell right back down. And I think that's what we're really seeing. So I think, of course, year over year we came down. So that's, you can kind of put that in as a silver lining. By the way, 10-year yields, nobody's focusing on that. It kind of feels like it's just creeping higher. It's back up to 3.73%. So almost 3.8%. We've got the dollar index. These two feel like they can just sneak away. Nobody's going to pay attention here. We got dollar index back up over 103. And this has been a rally from like 102.5. This is like 0.63% gain. And the 10-year yield is also really pushing higher there. Donald, how are you celebrating Valentine's Day? Well, it's already almost 8 p.m. here. So I'm going to do this live stream for another hour. Spend some time with our Discord members later tonight, answering questions, sending out alerts, and then we'll pretty much go to bed at around 10. So pretty typical day. nothing out of the ordinary. Yeah, I mean, well, I couldn't agree more. I think the Fed members definitely have been sending us a lot of mixed messages. I mean, Jerome Powell was saying one thing. A lot of Fed members are saying completely different things. So at the end of the day, I feel like even the Federal Reserve members don't know what is happening or what's going to happen. So it's pretty much a guessing game for almost everybody right now. Oil down $2. So yeah, we're seeing a little bit of a pullback. And this has just been so much consolidation here. It's been almost textbook, right? It's almost as if that you can now start to kind of trade oil confidently in between that range, right? Just getting perfect support at 70, low 72, 73, getting a perfect resistance at high 80, 81. It's just a lot of consolidation there. All right, so we're going to end the poll here. Wow, 500 votes. Very pleased with that result, but 54% majority of people expecting the markets are going to be red today, with 31% expecting green and 14% expecting flat here on the day today. I will be quite surprised to see the markets push higher today. Like if you see like a massive rally And I'm not talking like 0.5% green day, because that, like in an environment where there things are so. By the way, one more thing I just noticed is the Fed funds futures. Take a look at this, over 5%, and that's at 1.2% right now as of today. So interest rates, they're definitely expected to go higher. By the way, for those of you who are using your TradingView platform, if you're using TradingView, you can kind of put down this symbol. This is the Fed funds futures, so 30-day federal funds futures, December 2023. So for the 1 year forward. So you can take a look at this index if you want a much better representation of where interest rates are expected to go according to the Fed funds futures, if you don't want to go to the CME watch tool every single time. So that ticker symbol is going to be 100-ZQZ 2023, right? So if you want to check that out, feel free. So ASML is a fantastic business. This is a really, really good company. A very strong, consistent growth in revenues and earnings. I've done several videos on ASML. Unfortunately, I mean, it's just a valuation that I can't kind of wrap my head around. But if it ever drops down to lower levels, I'm all over it. But I kind of missed it back in October. Like it's rallied, 85% from those levels. But resistance is going to stay put at $703 here. And support level at close to 528. But it's a fantastic business. Long answer short. I have already done a video on them, Ash. So I would definitely encourage you to kind of check that out if you haven't already. Man, we've been going at it since 8 a.m. So Tristan says housing prices will not fall ever. That's a really bold prediction there, Tristan. This is what I feel like this should be the quote right before 2007. Somebody definitely said housing prices will not fall ever. Right, like in like March of 2007. But no, like why would you think they would never fall ever? Like they can absolutely fall. JT, what is orange juice you always mention in your daily video? It's a very important commodity, man. It's a really important commodity. We talk about it. You got to keep track of how prices are doing for a lot of commodities, including orange juice. People love orange juice, and it's a good insight. It's a good indicator for sentiment, inflation, lots of things. All right, so 5 minutes, 6 minutes left for the markets to open. Still have the dollar index pushing through. The 10-year yields. Volatility is not really moving all that much. Still down 3.5%. Even the markets are sliding lower, but still under 20. Crude oil prices coming down. Ethereum sliding sideways. Lots of consolidation for Ethereum and Bitcoin both. Just been trading sideways here. And of course, we got the 10-year yields pushing higher. We do have the spreads still negative, pretty negative, so to speak. And we got the 10 and 6 months still negative 1.3% with. We're still leading. I mean, Bitcoin, Ethereum still leading, but we'll see whether they do that for long or not. Talking in a meaningful way. I mean, it's still possible. I mean, I would still consider, like in some markets, depends on the market, but some markets can be down 15 or 20% or more, versus some markets can be, down 5%, or some markets cannot be down at all, right? So it really depends on the market, but on an aggregate basis, sure. I mean, it's the probability for us to see something similar to 08, where prices were down 50 to 60% on aggregate, is low, but it's possible, right? So never say never. Adam, so what soccer team you support? United, and just United, and used to support Real Madrid. I mean, I still do, but United has been my team for the longest time. Yeah, retail sales are coming out tomorrow, so that's going to be very important as well. So, okay, what price would you go long SPY? 380. So SPY support at around, I would say, like that intersection, right? So we're talking about S&P. As a trade, I would be at around 39.75, so 4,000, around those levels. As a trade, right? That's about $400. But from a long-term perspective, like I would love to buy more at 375 or even as low as 350s. So those right there would be levels where I can definitely start to buy more. So Ronaldo guy, huge Ronaldo guy, huge Ronaldo fan. I watched him twice at the World Cup and even at Old Trafford last season. I don't have any Man United stock. I wish I did, but I don't. I think Elon Musk is actually trying to buy United again. I think there was some debate, there was a meme on it, but then now he's actually considering it. So we'll see. All right. So ChatGPT is responsible for Microsoft entire run and Google entire fall. Microsoft is more of a monopoly. I don't think Google is at all. Well, again, it's debatable, right? Which market are we talking about here? Search, absolutely. They've got dominance, so that they are a monopoly, right? They're the only ones that are controlling over 85-90%. It's not even a duopoly, right? It's only Google. So search, yes, they can be considered as a monopoly there. Advertising, not so much. You've got Meta, you've got Google, you've got Amazon, you've got a lot of other companies. Cloud, not so much, right? You've got a duopoly. I mean, even more than two companies. You've got Amazon, you've got Microsoft, you've got Google. So hardware, not even close. Apple has them beat. So it really depends on the market segment that you're looking at, right? They're not a pure monopoly, but they're definitely in their own sort of market, specific market. They control majority of that share. So all right, couple minutes left. We're going to switch over to the actual indices here. We'll see what the market has in store for us after the inflation numbers. The Dow Jones, we haven't talked about it much, but down 28 basis points right now, and everything's ready to kind of gap down a little bit. Tesla 1.5%. Microsoft's still up. Man, Microsoft's strong. So DocuSign, I've done a video on them before. So merch, you can actually check them out. Money Vesting DocuSign analysis, and you'll find a couple of videos. But I'll do like an update analysis on DocuSign very soon. They are reporting earnings, I believe, in the upcoming weeks here. Yeah, so March 10th, when they report earnings, we'll take a look. They were in a falling wedge pattern, then they had a very nice breakout here, 64%. Right now, getting rejected at $68 resistance. So we're seeing a little bit of a validation of that support and that 200 SMA at $60. So that's where we are, but I will be doing an analysis on the fair value for this company as well in the coming months. All right, we're ready here. Inflation out? Yes, inflation was out 6.4% on a year-over-year basis. Will Upstart crash after closing? I don't know. Like, that's one thing that I have to tell you guys on this channel. Like, I'm going to be very transparent and honest with you guys. A lot of these predictions that you have, like if the stock is going to go higher or lower, we don't know. And our job is not to predict. Our job is to be more managers of risk and trade on the probabilities, right? If the probability makes sense and if the optimal risk reward trade setup shows up, we take it. We don't make predictions like, I'm betting that the stock is going to go higher after earnings, so I'm going to bet on it. No, we look at the data, we make assumptions, we kind of generate those probabilities, and then we trade. So honest answer is Upstart going to crash after earnings? I don't know. I have no idea. So, but I'm looking at cash secured puts with certain strike prices, with a certain delta, with a certain premium and a return on collateral. If it makes sense for me, and depending on where my break even will be versus where the price is, and a potential crash can be 20 to 30%. If it's less than that, then that trade makes sense. If it's more than that, then it doesn't. So those are the type of analysis that we have to do instead of just like kind of asking ourselves if whether a certain stock is going to crash or rally after the earnings. Anyway, markets are open here. We got the Nasdaq down 87 basis points. We got the Dow down about 160 points, and the S&P is down about 24 points or 0.5% here. Lots of individual stocks like Tesla is down 2%. We got Google down 1%, trading a little bit under 94. Remember, low 90s, very good fair value for Google in my opinion. We got Apple dropping 1.68%, and oof, it is quite a red Valentine's Day, just as expected. It's markets are definitely playing along the theme for Valentine's here. It's gonna be good if the entire heat map is just entirely red for Valentine's Day. Ooh, Nasdaq here really dropping quite a bit. So we got to be kind of approaching at support at $300. We'll see if there's any buyers that step in around here or if you continue to slide lower. Even if you do see a pushback higher, that middle VWAP is going to be coming into play at 301.79. If you get a rejection there, then we're probably looking at lower highs and lower lows, but we'll see if there's any opportunities for us to trade back higher. I mean, if buyers are strong, anything is possible, but so we'll see. Tesla here recovering a little bit, only down 2% right now. Some green candles coming in. Microsoft's still green. Apple's struggling a little bit, and so is Google. QQQs, we'll see if you actually do make a new low here. Right in the third minute, some buyers stepping in, but we'll see if that's going to be enough for the markets to push higher or not. All right, so Tesla making the early move here along with Google. So right now we do have almost all big tech still down except for Microsoft, but they are recovering very nicely. I mean, Amazon, Apple is still down over 1%, so is Nvidia, but everything is charging back higher. Man, I tell you, buyers are aggressive in this market. They're just like not leaving any opportunities. Every time they see red, it's just like loading up the truck here, backing up the truck and just throwing shares in. I was also reading that there's a lot of institutional funds like hedge funds that are just been sitting on the sidelines for quite some time, like in January or February, because of the uncertainty there was around the economy. And if they're actually forced into getting back into the market because first quarter is going to be almost over at the end of March, they have to release their prospectus to their clients. And if their performance is not as good as the market, then obviously their clients are going to find new managers. So if that's the case, then they have to really be forced into putting money to work. And that is, buying equities, whatever's outperforming for the year. So something to keep in mind. But it also depends, how much money is sitting on the sidelines right now. So AMN, I have not looked at it. I'll take a look at it, Adam, if it's a good value. SNPS, TrueView, I've not looked at that company either. Maybe I have. I don't remember. Synopsis, no, I don't think I have. But I'll do analysis on them maybe in the future. Wow, that is a very good revenues and earnings. I'll definitely do analysis on them. Thanks for mentioning. And AMN. So decent, lots of flat revenue there. Not a lot of volume, but I'll still add it to the watch list. See if there's any opportunities here. So, when is the inflation report? It all already came out about an hour ago, so we already know the inflation numbers that came in for the month of January. So now Microsoft is struggling a little bit, definitely making new low of day. Look at Microsoft go. There's just a lot of inverse price action here versus Tesla and Apple and Google. So on the day, we've got AMC down 5%. We got Tencent, Upstart's already down 3%. Neo's down another 2.5%. Enphase is down 2% to low 200s right now. What's actually green? Palantir still holding steady and strong, up over 9%. InMode's up 2.8%. We got Cloudflare up 1%. With Mara pushing higher, Truly, Robinhood, Vertex flat. But it's a lot more red than there is green on the markets at the moment. So, all right, everyone. So that's going to be it for today. Definitely going to be cutting it short a little bit because we've been live for like over 2 hours now. So thank you so much for joining in. I really, really appreciate it. Make sure that you drop a like, subscribe to the channel, hit that notification bell so you don't miss out on any future market updates and live streams and videos. And of course, there is a Valentine's Day discount for the bundle, right? So if you want to get access to both the fundamental and technical analysis courses, there's over 80 plus video lectures in that, over 16 plus hours of content, and access to the Discord for Q&A. The link's going to be down below, and the coupon code is going to be Valentine, all capital, Valentine, and that's going to give you a 60% discount just for today. So that does expire tonight. As always, happy investing.